What's going on YouTube? Mark Fleetwood here. Welcome back to the Daily Grind Trader. Today's video will likely be my most critically important teaching moment that I can give anybody who is not familiar with this technique. This indicator and using the indicator in this way is the most important thing you can learn to do while trading. It will open your eyes to so many different things. I'm going to show you on Bitcoin's chart over and over and over again how this technique can help you predict the market with stunning accuracy. Stay tuned, guys. I'm going to tell you all about it. All right, everybody, we know the drill. I'm not a financial advisor. This is not financial advice. I'm sharing technical analysis and hopes you use it as you see fit. But remember, you manage your own money and you manage your own risk. So what we're going to do, we're going to hop right into the Bitcoin chart. And this is Bitcoin against USD. And this is a daily time frame, because daily time frame has some of the larger moves and they're easy to see, and we all know these macro moves that have already happened. What I'm talking about is finding RSI divergences and using them to your advantage to know when moves are going to likely end and when they may not actually be ready to end. So first and foremost, a bearish divergence happens near the top of a bullish move when the bull move is running out of steam. And what we have here, this red line here, we have a peak high to a peak high, but RSI is a peak high to a lower high, running out of steam. Now you might think, okay, the bullish move is running out of steam, it's about to be over. But you see this blue line here, this is our bottom, and I'm going to zoom this in a little bit so we can see it better. We have our bottom to bottom, and you see the 21 smooth moving average has been holding support all the way through this run. The 21 smooth has been holding support. We've got a bottom here and a bottom here. And what we have is we have a low and then a higher low. But on the RSI, we have a low and a lower low. This is a hidden bullish divergence. This means that the bears are having to put way more pressure down, but they're not getting the price down. So the top, they're running out of steam on the top. They're not pushing the price up, but they're able to keep the price from falling. Hidden divergences mean that, hey, the move is not done yet. A divergence means the flip is about to happen. The hidden divergence means wait, not yet. So then we have another peak to another peak high, and this was our all-time high at the time. This was $64,000. And again, the RSI was lower and lower. But this bottom to this bottom, there was no divergence. This was a higher high or higher low from this low to this low is a higher low, but the RSI was higher. That peak, there was no hidden divergence between there. And then we dropped below the 21 and we created a lower low. That is the break of structure. That is this bearish divergence has now broken structure, and we are now in a bearish structure. Now what you can do at this point is you can recognize this lower low, and there's typically going to be a lower high to follow, where you don't have to sell and panic here. $59,000 was the quote-unquote bull trap. And it's a great place to get out if you're a holder and you bought in down here, you know, at 30, 40,000 or even lower. 59,000 is a great area to get out. This is the bull trap. This is where people think the bullish momentum is staying, but it doesn't. And this is where a lot of people buy in and get liquidated. You get the cascading drop down. This is where you get that cascading downward drop. Lower low happens after a bearish divergence has come to fruition. If you don't get the lower low, that bearish divergence can happen 2, 3, 4 times in a row. And you see here, there was the first, the second, so that's your first bearish divergence, then your second bearish divergence, and then your third one. Now, between the first and second, there was also a hidden bullish, so that's what you have to be careful about. You're looking for hidden to say this is not over yet on a trend. So a hidden bearish is here. This orange line is a hidden bearish divergence. We look like we bottomed out, and we immediately bought back. So we immediately bought back here. This was our little peak here in the RSI, our little buyback from the dump. We ran it straight across, and we put in a flat high. It wasn't a higher high, it wasn't a lower high, it was a flat high. But look at how much more buying pressure on the RSI had to come up to get a flat high. This is a hidden bearish divergence. The bullish pressure, it required too much pressure to not move the price. The bears were still in control. And it quickly fell off of that until the bullish divergence completed. We had bullish divergence from the very bottom, and as the price was going lower and lower and lower, the RSI was still, the bottom peaks of the RSI were still getting higher and higher and higher. So the bulls were starting to pick up momentum, but the hidden bearish here showed that the bears were still in control of that move. And we got that dump off of that attempt at a breakout. This was an attempt to get out of this consolidation. And we have one kind of happening right now. We had an attempt to break out of the consolidation with a bearish, hidden bearish divergence. And the reason why I believe this is going to still continue to go down, and this is drawn in white and not green, is because there's no divergence here. The price is going up slightly. The bottoms, the peaks were going up, and the RSI went up. And even here, this so far looks like it's a peak down or a valley down, and the RSI is up. So the only thing that's creating divergences is on the bearish side. And if you want to do the peak here, you could very easily go from this peak to this peak, and you still have a big hidden bearish divergence. And this is more likely going to be the play. And you can even go all the way up to here, because this was all kind of a single run down. There wasn't really a peak up. This is really the peak up here. And I'm going to adjust this and go through the thought process. You don't always get a decent peak. You don't always get a decent valley. It's a lot of sideways consolidation. And these sideways moves here typically will show here. This showed bullish divergence. The price was coming down, but the RSI was coming up. This was bullish divergence. But coming off the bullish divergence, the price tried to spike up, and it got rejected here because there was a hidden bearish. The bears were still in charge. The bears weren't letting this play out. So until you get a divergence that doesn't have a hidden opposing divergence, the hidden divergence will still play out. The current trend will still play out. All right, guys, so remember these keys. If the price is going up and you start to see a bearish divergence, wait to see the hidden one. If there's a hidden bullish, you still got a little bit further to go. If you don't see the hidden, likely going to come down. Hidden here, this next run up, no hidden, down, lower low. Hidden here, no hidden here, lower low. Hidden bearish here, no hidden bearish here, higher high. Flipping the script. Hidden means it's not over yet. Regular divergence means the flip is about to happen. Keep an eye on both. They're both critically important. So right now, we're looking at hidden bearish. Still hidden bearish right now. So price action is likely going to continue to fall. We're not ready for a flip yet. It's not happening yet. With that being said, guys, I hope you enjoyed this video. I hope you got something from it. And as always, until next time, peace.